What should we say to the consumer who's looking at this headline, but then rates are actually going up? Do we move the conversation to say, hey, let's not think about that. Let's think about, why you're purchasing or selling, and then the option of refinancing in the future? Like, what is the magic kind of conversation around that particular topic? Good morning. Welcome to another Motivational Monday. My name is Matthew Hodge, Executive Vice President here at LPT Realty, and I'm joined by Robert Palmer, Founder and CEO. And if you are joining us for the first time, we are so excited to be with you this morning in community. Also, quick announcement, we do have a Motivational Monday Instagram page that has highlights from the show. So if you want to slide over to Motivational Monday on Instagram and catch those reels.
You gotta slide on over there.
You got to slide on over there. Slide in those DMs.
Like
we would very much appreciate it. Great way for you to share the message with people who are not also inside of the brokerage, and also a great way for you to catch the highlights yourself. But with that being said, Robert, good morning. How are you?
Good, man. I like your look today.
Thank you.
You get a little sweater action, the collared shirt.
I didn't know if it was like Mr. Rogers-ish.
It is a little Mr. Rogers-ish.
It felt that way.
I gotta be honest.
I'm trying something new. It's not working, apparently. But how was your weekend?
It's good, man. It was good. Busy but good. There's a lot going on right now, right? We're in this sprint to the end of the year. A lot to figure out before December 31st. Always so much momentum and movement, and now is no different. So yeah, it's been good. But so we had Luna's little birthday party this weekend. She turned 5 last week. Thank you to everyone who wished her happy birthday on Facebook, by the way. I don't know if you saw that video, but just her cute little laugh. I filled the car up with balloons, and so when she opened the door, they all came flying out. But yeah, so we did that, which was great, and just got a lot done and moving forward. Excited to be here today.
Awesome. Well, let me give you a quick breakdown of what we're going to discuss today. One, we're going to go through the DESI graphics that you promised last week. We're going to go through a market update, and then we're going to talk about some things that you should be doing now to prepare for Boomsday for 2026. As you guys know, we've talked a lot about that being the time, when we see that the market will change momentum, where we could see inventory expand, interest rates could potentially cooperate, and that should create more activity within the market. So what should you be doing now through the end of the year that's really going to help position you for that? And then we got some video recaps. So that's going to be the show for today. So with that being said, Robert, I'll turn it over to you to walk us through the Apex Training DESI graphic.
Yeah, so we won the Apex Award, second year in a row, right? So this is Training Magazine, the renowned, training magazine, training companies on how to do training. And so it was 2 years in a row now. Last year, we were the second ranked residential real estate brokerage. There was one other brokerage that ranked higher than us. This year, we are the only residential real estate brokerage to win the Training Magazine MVP Award. So really excited about that. We found out late Friday night or Saturday, so there wasn't time to get DESI generating graphics last week. And so this week, as promised, we have them. If we can throw that up, Davey. If you log into Connect, go to Marketing, Featured Graphics. We have a nice set of Training Magazine award announcements for you to share via DESI on social media. There's the 25 winner graphic from last year, the 26 winner, and then the back-to-back Training Excellence graphic there. So those will be in everyone's Connect. Let's blow up social media, letting everybody know that LPT is officially the #1 real estate brokerage in training, according to Training Magazine, after just 2 years of setting that goal.
Yeah,
so
awesome.
Just the overwhelming effort that we bring and the commitment and everything we've done to just go all in on making sure that we are here to train and win at the highest level.
Yeah.
So really exciting stuff there. That's great. We've got some market updates. So big week this week. The Fed is going to announce most likely another rate cut this week. And as we've talked about before, that's actually making mortgage rates get a little bit worse and making the 10-year Treasury rates go up a little bit because of the inflation fears. And so we talked about this the last few weeks on Motivation Monday. The Fed cutting is the Fed getting out of the way for the long-term result that we all need. But in the short term, it's actually creating a little bit of pain around rates because there are a group of investors in bonds and treasuries who believe that these Fed cuts may spike inflation. There's a couple of other interesting narratives going on right now in the market as well. One is that because of the impact of AI, that the Fed should actually let the economy run a little bit hotter than it normally would. because there is this boom happening right now, the AI infrastructure. And again, it's a lot of this is a temporary state, right? When you have a new technology like this that comes on the scene that is as transformative as AI is already being and has the potential to become, it's going to create these temporary spikes in economic activity because you have to build that infrastructure. But those are not forever things. And so there's a lot of economists right now who are writing papers and opinions and encouraging the Fed and trying to influence the Fed from the outside to say, hey, it's okay to let the economy run a little hotter than you would have otherwise. Alan Greenspan did this perfectly back during the tech boom. And so, he is like lauded as having the best timing and understanding the market. And I think every Fed chair wants to be remembered the way Alan Greenspan is. And this is going to be somebody's opportunity if they get this right around the AI boom. And so you have one school of thought right now that says, okay, the economy can run a little bit hotter. Inflation can maybe be a tad higher than they would like, and they should continue cutting rates and loading up because it's this AI effect. And you have another group that says, hey, the inflations from the tariffs are still not fully baked in. We're not buying into the AI effect. And so that group is driving Treasury yields up. And so what I firmly believe is that we're going to see mortgage rates lag the Fed. So the Fed's going to keep cutting, which again, from my perspective, means the Fed is getting out of the way. Because what we know is mortgage rates cannot come down if the Fed doesn't do the cutting they are doing. But it doesn't mean mortgage rates are going to follow in lockstep. And so the situation that I see setting up is the Fed is getting out of the way, and then early next year, right around the time that the spring buying season starts, which is fantastic for us, you're going to see the first year-over-year inflation numbers start to come into play from when the tariffs were first announced earlier this year, and that's going to be the signal that finally starts to move things down. Now, if that doesn't happen, we're going to have a different result. I believe it's going to happen. The data I follow points toward that coming, and so the Fed's getting out of the way, and now we will lag a little bit, but I think this puts us in a great position for mortgage rates to start to come down right around Q2 of next year, which is fantastic for us as an industry. And again, we're seeing the jobs softening. We had a couple of days of good mortgage rates about a week ago because we had a weaker than expected jobs number. So there's a lot of noise in the data right now. And ultimately, what we know we cannot change is the Fed had to get out of the way. And so that is the thing I am most excited about, even though it's actually causing mortgage rates to get a little bit worse right now. This week, mortgage rates are a little worse, 10-year Treasuries a little worse, because of the Fed cut that's going to be announced this week. But in the long run, it is necessary for us to get back to those magic rate numbers, which I think is anything in the fives at this point. Low sixes, high fives, a lot of demand is coming off of the bench. A lot of buyers and sellers, and we've seen glimpses of this, right? We had a couple of weeks, maybe 6 weeks ago, 4 weeks ago, where rates were pretty nice, and we saw a lot of demand. We saw home searches jump, we saw listings jump, we saw a lot of people reach out for tours, and so I think we are right on the cusp of that rate sensitivity kicking in, and everything we need to is lining up correctly. The final piece will be, are we going to see the inflation coming down? I think yes. Others think no. We're going to find out in March or April.
So, quick question. So, if a consumer is starting to hear, hey, the Fed is cutting, they're probably going to think that's immediately going to translate into interest rates. So, what should we say to the consumer who's looking at this headline, but then rates are actually going up? Do we move the conversation to say, hey, let's not think about that. Let's think about, why you're purchasing or selling, and then the option of refinancing in the future? What is the magic kind of conversation around that particular topic?
Yeah, so I think it's a couple things. I think this idea of the Fed getting out of the way is a great narrative and a great storyline to share with your consumers. Right? Because remember, a mortgage is the most powerful consumer option from a financial instrument standpoint they can have, because the consumer can always decide to refinance. So if rates go lower, the consumer can refi that mortgage, but if rates go higher, the bank can never take it away from them. And so if you believe rates are going to start coming down, there's no downside to buying now, knowing you can refi that mortgage later. And so what I mean by the Fed getting out of the way is think about my hands are two lines, right? So this hand is mortgage rates and long-term treasuries. And then this hand is the Fed short-term rate, okay? Well, this acts as a floor. This can't get below this.
Okay.
And so, but it doesn't have to necessarily follow it either. And so what's happening is the Fed is lowering this floor threshold and getting out of the way of the long-term rate's ability to come down.
Okay.
If the Fed stayed up here, we can't come down. Like, we're not going to get below. Like, the idea that long-term rates are going to be below short-term rates, we would have to be in like a crazy, terrible recession, like very unlikely, like economic disaster is happening. And so the Fed is getting out of the way by lowering the short-term rates through this series of rate cuts. But mortgage rates are saying, hey, we're not going to follow you immediately. We don't know if this is real or not, but we do know if the Fed hadn't gotten out of the way, there would be no path to lower mortgage rates. So the fact that the Fed is getting out of the way means that they're not going to make the decision when the time comes. They're going to let the market make the decision. So when the market up here in the 10-year Treasury feels confident that inflation is under control, mortgage rates have a clear path to come down. Where if the Fed was still up here, we would bounce off of the Fed's artificially inflated short-term rates. So the Fed has now gotten out of the way, right? The other big thing that's happening is, and there's been some news around this, is we've been in a situation called qualitative tightening, QT. So what that meant is whenever the Fed had mortgages pay off, right? So remember, the Fed owns all of these mortgage-backed securities. Well, every single month, people are making their mortgage payments and the balances are going down. And so when the Fed got that money, they were just taking it off the table. It's called letting their balance sheet run off. So traditionally what the Fed would do is, in a neutral stance, when a mortgage pays off, the Fed would take that money and they would reinvest it back into a new mortgage or back into a new Treasury to keep their balance sheet stable. But during qualitative tightening, the Fed doesn't. As those mortgages pay down, the Fed takes the money off the table and they put it in their pocket, all right? In what's called quantitative easing, the Fed is actually buying Treasuries and buying mortgage-backed securities, which is increasing their balance sheet, which means they're taking money out of their pocket and putting it back into play. And so we moved from qualitative tightening, which is taking the money off the table, to now the Fed has said, hey, any of those dollars that come in from payoffs of mortgages, from maturing Treasury bills, we're going to put it back into new Treasury bills. Now, there's a slight problem there. They're not putting any of it back into new mortgage-backed securities. Right? So think about the supply and demand. So we have mortgage-backed securities that are paying off, and instead of putting that into new mortgage-backed securities, which would help mortgage rates, they're only putting it into Treasuries. Now, that will indirectly help mortgage rates a little bit, but not as much as if they had put it directly back into the same asset that it came out of. And so what you're going to see is this imbalance now, whereas the mortgage-backed security portfolio is running off, they're increasing their Treasury portfolio, which has an indirect effect, but not a direct effect. My hope is that we're going to see messaging from the Fed somewhere in the near future that they're going to change that stance, and they are going to start to reinvest the payoffs from mortgages back into new mortgages, giving direct support to mortgage-backed securities, helping drive down the gap between the 10-year Treasury and the 30-year fixed mortgage rate, right? So super technical stuff. I try to explain that in the most simple way I can, but I think it is important to understand these different dynamics, because what we're really watching for at the Fed meeting this week, I think we know they're going to cut. I think that's kind of a foregone conclusion. The question now is, are they going to shift their stance at all on how they're going to neutralize the balance sheet, or are they even going to potentially buy some mortgage-backed securities? I think they recognize we need lower mortgage rates. So all these things are in play. There's a lot of dissension inside of the Fed right now. They don't all necessarily agree with each other. And so the markets are watching to see what is the Fed going to do this week. And it's not about the cut this time. Now, the cut is expected. All of the details, the market reaction to the Fed meeting will be all about what are they doing with the balance sheet? What is the stance on future cuts? Are they going to support mortgage-backed securities in a bigger way? Are they going to continue to support only Treasuries? This is the stuff we're watching for when the Fed meets later this week.
Awesome, man. Well, if this is your first exposure to this conversation, we would definitely encourage you to kind of rewind this and watch it again. It takes a couple of times for you to really let it soak in, and the ability then to explain it to someone else is also going to be a higher level of understanding. But thank you for explaining that to us. I haven't thought about it in that way, with getting out of the way and and clearing that. That was actually very helpful.
And so bottom line for our customers is, now is the time to get serious,
Yep.
right? Because if we believe this is what's happening, then rates will come down. You can always refinance, but you want to get in ahead of the big curve. Like
Right.
you want your home to already be listed when the wave of buyers first shows up. You want to be a home buyer who's getting out ahead of the curve of buyers who may come in front of you.
Yep.
And so understanding this economic dynamic that is playing out right now is a reason for your consumers to maybe get off the sidelines a little early, right? The smart consumers will move first. They're not going to wait for the headlines. They're not going to wait till after rates come down. They're going to go ahead and move now. They're going to lock in the best inventory. They're going to get their home on the market and show ready, listing pictures staged, ready to go for when the right time comes to pull that trigger. And that's our job as advisors. That's your job as their trusted real estate professional to help guide them and help encourage the ones who have the vision to look forward to go ahead and get ready to take action now, because you want to be on the front of that wave. You don't want to be catching the tail end of it, because you will see, I think, home prices start to accelerate. The best inventory will start to get snatched up early. I think there's going to be some benefits to getting out in front of this thing, because a lot of our sellers need to sell and buy.
Yep.
And so if they wait too long to sell, maybe they do a little better on their sale, but they're going to lose on the next purchase. And so if they're moving up, that's a bigger problem. If they're moving down, not as big of a problem, but still we want to put them in the best position to buy right and sell right. And that requires your expert guidance. And now you've got some great talking points to discuss with your clients.
Awesome. Well, we appreciate that. And I'm going to use this as a way to parlay into the financial conversations we were having in New York, right? Where we were at Wall Street. We had the opportunity to, meet with some of our audit firms and, some of our vendors.
Yes, this was cool. So we got invited up to meet with, the NASDAQ and the New York Stock Exchange to understand what it means for a company like LPT to list on each of the different exchanges, and, what benefits they would have for us if we choose them, to be our preferred exchange at the right time. And so we took some of our, what I'm calling our 1,000-unit teams, our Titan teams. So we have a handful of teams here at LPT Realty who are doing over 1,000 transactions a year. And so we actually put their team logos on the NASDAQ board in Times Square as a congratulations for, again, I think there's only 20 teams in the country who have done 1,000 units in a single year. We have 4 of them here at LPT. We will have like 10 of them on the next Real Trends list that comes out. Yeah. The way things are moving around right now. I really believe that when Real Trends comes out next year, that half of the top 20 teams in the United States will be at LPT Realty. I want you to think about how crazy that is. Like, I'm calling that. That has not happened yet, but I'm calling that. We're going to make that happen. We're going to move that mountain. Half of the top 20 teams in the United States will be at LPT Realty when Real Trends comes out next year. We're going to watch for it. But anyway, so we did this amazing event in New York, and we do have a fantastic recap video. So Davey, if we want to hit play on that, let's let everybody check out this amazing New York experience we had.
Dawn hits steel and glass like a glove to the jaw. Bridges draw hard lines across the Hudson. Mammoth towers like angled giants standing shoulder to shoulder. But this one isn't about the skyline. This one's about who stood in it. Founders, rainmakers, operators, billion-dollar teams, and mega price point machines. The people who hire, train, and carry markets on their backs. Heavyweights from every coast, all in one room, gloves laced, each stepping up for their shot at the belt. New York doesn't hand out participation trophies. It keeps score. It tallies who shows up. We showed up. They call it the city that never sleeps, not because it's restless, because it's relentless. The meters keep running, the ledger never closes. Here, the streets sense weakness. You can fake it somewhere else, not here. In this town, you put your money where your mouth is, or you get spit out. On Broadway, a tower built to track movement lifted a new name into the light, and the street noise softened just enough to hear the breath we all took at once. It wasn't ceremony, it was coronation. The city saying, if you belong here, act like it. And then, the city blinked our teams into the skyline. 4 marks on the board, 4 giants of production, all here to take their bite out of the apple. What happens when big fish leave small ponds? They learn the tide, and they swim harder. We didn't come to be impressed. We came to be measured, to see where the ceiling was, and then break through it. Because growth here isn't louder, it's heavier. It has numbers behind it. It has names on it. It has a city's weight and a city's wind and a city's way of asking, can you keep up? Yes, we can. So when we leave this island, the light's thin, the pace does not. The ledger is still open, and now the world is on notice. There's a new player in the game. Start spreading the news.
I tell you what, them boys are so talented.
Oh yeah,
Davey
we have
and
an
John.
amazing crew here. Everybody putting the stuff together, from planning the events to shooting the events to editing our amazing videos. It just we're blessed.
Yes.
You know, we're surrounded by amazing folks at every inch of this company. Yeah, man, we love you guys. They're hollering at me from the back. You think about number 2 on the Deloitte Fast 500, the second fastest growing tech company in the United States is a real estate brokerage. You know, the welcome we're receiving in New York, in Manhattan, and all of that's because of your commitment and your belief and taking a chance on this startup brokerage that we dreamed up 4 years ago almost to come and revolutionize this industry and to change the game and to put real estate back first where it belonged and put training and education back at the forefront right behind that commitment to real estate and just driving this amazing community and culture. And we all get together every Monday morning at 11 a.m. Eastern time. Like, all of this has been a huge part of building this. And so thank you to all of you on this journey with us. It really is cool. We'll get that video loaded up into Connect. I know a lot of you probably want to share it or be able to watch it again, so we'll get it out there. But really was an absolutely amazing trip.
Yes, sir. Yes, sir. Okay, well, with that being said, we are just about at time. Any final words? We are in the final month of the year. Things that we should be thinking about, things we should be doing. We didn't get to our Boomsday prepping, the final things. But real quick
I went a little long-winded on the market recap.
Yeah.
So one of the things we did to get ready for next year, and I think we have this video to share, is we redid my intro video. And so for those of you who joined LPT early on, there was this intro video that, again, the amazing team made about me to introduce me to agents and markets where, I wasn't known. And it was very heavy on what I achieved in the mortgage business. And so, we are now different. Like, my identity is now about what we are achieving together at LPT. And so I challenge the team to say, hey, I want you to rethink this. I want you to make this not about who I was before LPT. I want you to make this about who I am now that we are LPT. And so de-emphasize the mortgage. That's still in there because it's a part of my journey. But we're going to leave you today with that new sizzle video. Those of you that attended FallCon got to see it live at FallCon. That was the kind of grand unveiling. But we're going to make this available in Connect as well. But that's one of the things I'm doing to prepare for next year, because I feel like my personal transformation from being known as the mortgage guy, like, I am now the CEO of the fastest growing, most awesome real estate brokerage in the world, and that's who I am now. And I feel like I've kind of shed the skin of the mortgage guy. And again, it got me to where I am. It gave me the financial resources and the connections and everything to be able to build this amazing company with all of you. But this is who I am now. I'm the CEO of LPT. It's what I wake up every day, thinking of myself as. And so this new video reflects that. And so as we kind of wrap up this year, only a few weeks left in 2025, I'm sharing my personal transformation with you, and we're going to leave that with this video. And again, huge shout out to our team who makes us all look so good in the video department. So everybody have a great week. We'll see you next week on Motivation Monday. Let's roll that video on the way out here, Davey.
So you think the American dream is dead? Well, then you haven't been paying attention to Central Florida. Picture this: Lakeland, Florida, early 1980s. Robert Palmer's growing up in a single-parent home. His mom's doing everything she can just to keep the lights on. Nintendo? No. Weekly allowance? No. Trust fund? Hell no. Hunger for future success? Absolutely. Now fast forward 20 years, Robert builds a nice career for himself in the mortgage space. Good, right? Well, not good enough. He poured it all back into TV and radio ads, and I do mean all of it. Yeah, he was back to square one, but he forced Central Florida to know his name, and know his name they would. Between TV, radio, and direct mail, Robert Palmer became the guy in the mortgage space in Florida. Now that's success. Nice, right? Nope, not good enough. Now it's time to take on the real estate space. He saw the problem. Too many great agents out there who could close deals but didn't know the first thing about marketing. So he built something to solve it. A complete done-for-you system that helped agents stand out in their market. Flyers, postcards, signage, digital, all of it delivered in a box. He called it Listing Power Tools. but everyone else just called it the magic white box. And believe me when I tell you, it worked. It worked everywhere, from Miami to Minneapolis, from Beverly Hills to Boston. That kid from Lakeland just went national. Agents were leveling up their brand overnight. Those magic white boxes were hot. That should have been enough, but not for Robert, because he wasn't interested in being a vendor. He wanted alignment. He wanted to give agents every tool without limitation. So in 2022, he made the call. I need to become the brokerage. And that is when LPT Realty was born. LPT Realty didn't tiptoe onto the scene. It came in swinging. Fastest growing real estate brokerage in history, and it launched in the middle of a crappy market when half the industry was whining and tapping out. But here's the thing. Robert knew it wasn't just about speed. Agents didn't want a one-size-fits-all pitch. They wanted choice, so he gave it to them. Different comp plans, different paths. You run your business your way. Oh, and by the way, every Monday morning at 11 a.m. sharp, he's going live to the whole brokerage to talk about it and spill the tea. But wait, Robert Palmer was still not finished, because not every agent needed the same thing. Some needed tools, others needed direction, and some needed a brand that could carry weight in the luxury market. That's where Aperture came in. Premium, polished, built for high-end listings. No fluff. Then Robert turned his focus to team leaders, pushing them to dream bigger, to build something scalable, to move out of their parents' basement, and he gave them what they needed to pull it off. Over the course of 2 decades, this guy built tools, companies, a brokerage, and a luxury brand, while pouring over $200 million into marketing and tech to support it all. And what's he got to show for it? Not much, only a real estate empire. So, I don't know about you, but maybe, just maybe, it's time to rethink your take on the health status of the American dream.